All right. Hello, everyone, and thank you all for joining us during the Lytham Partners Fall 2023 Investor Conference. My name is Robert Blum, Managing Partner of Lytham Partners. Up next here, we have a panel presentation, which we hope you'll find insightful with executives from two leading agricultural companies, Mark Herrmann, CEO of S&W Seed Company, Enrique López Lecube, Chief Financial Officer of Bioceres, as well as one of the industry's leading analysts, Ben Klieve of Lake Street Capital Markets. We've titled this panel, Harvesting Opportunities, Next Generation Solutions to Address the Global Agricultural Challenges. I want to get sort of right into things here. So if we could have, first off, have each of the audience members introduce themselves, a little bit of background on themselves, their company, that'd be great. Mark, why don't you begin?
Hey, thank you, Robert. Hello, everyone. My name is Mark Herrmann. I've had about a 36-year career in the seed industry. I started with DeKalb Genetics and then joined Monsanto through its acquisition of DeKalb in 1998. At Monsanto, I held several positions, including the U.S. branded seed and trait business lead, the president of Corn States, which would be Monsanto's traits and germplasm licensing business, where I had the opportunity to work with 250 independent seed companies providing germplasm and traits. In 2011, I had the opportunity to move to Monsanto vegetable business, leading the Seminis de Ruyter brands in North America out of California. In 2016, I assumed the role of CEO of AgReliant Genetics. AgReliant would be the third largest U.S. corn seed brand based out of Indianapolis, Indiana, as well as participating on the American Seed Trade Association board for about 11 years, where I actually chaired the association from 2016 and 2017 and 6 years on the executive committee. You know, it's a great opportunity on guiding USDA and international policy development and implementation to support all seed companies in that responsibility. Today, as Robert said, I'm the CEO for S&W Seed Company based here in Longmont, Colorado. We're focused on advancing sorghum and forages globally. It's a pleasure to be here and look forward to the session.
Fantastic. Thank you very much, Mark. Enrique.
Sure. So hi to everyone. It's a pleasure to be here. And thank you, Robert and Lytham Partners, for inviting us over to participate from this panel that I'm going to be sharing with Mark and Ben, for whom we feel sort of like a deep appreciation of his views for agriculture. So excited about what we're going to be discussing today. So my career in agriculture spans about 15 years. I initially started in Cargill and then in Glencore, where I led several operational and commercial positions. Mainly, I did have a past in commodities trading and inputs trading, before migrating more into the strategy and finance part of the business in Glencore and then moving into Bioceres in 2017. So kind of like moved away from my original training as an industrial engineer into agriculture, which has been a deep area of interest for me professionally. I'm happy to have been doing this in Bioceres for the last almost 6 years now, where we've been taking to market what we believe are the most interesting technology verticals in the space with biologicals and with seeds. So great to be here and happy to be sharing the panel with three of you.
Fantastic. Thank you very much, Enrique. Ben, please proceed.
Yeah, thanks, Robert, and thanks for having me today. It's a pleasure to be here. I am the resident equity research analyst for Lake Street Capital Markets, focused on small microcap food and agribusiness. Lake Street Capital Markets, full service investment bank headquartered out of Minneapolis. I'm based out of St. Louis, one of the kind of leading hubs of agricultural innovation here in the U.S. from a legacy of Monsanto. I focus my coverage as best I can on companies that I think are best positioned for kind of the next generation of agricultural production, be it companies with novel inputs like seed, chemicals, and fertilizer that are disrupting conventional kind of legacy products, or more downstream business models that are disrupting kind of legacy distribution systems or CPG categories. So it's a pleasure to be here today with all of you.
Perfect. Ben, thank you very much. You know, let's sort of begin right there with you. You know, at sort of a high level, crop prices have pulled back significantly from their highs, sort of the beginning of, I think it was 2022 there. wheat's down about 50%, corn is down 40, soybeans maybe down 25% or so. Talk through some of the macro dynamics that you see as contributors to the recent pullbacks, and in turn, what is sort of your viewpoint on where prices are going here in maybe the near to midterm?
Yeah, happy to do so. It's probably a good place to start the conversation, kind of frame where the market has been and where we think it's going. So on a high level, Robert, like you said, major rally throughout the grain market starting in kind of mid 2020, peaking in kind of mid 2022. That's really cooled off over the last 18 months or so. Lots of contributing factors. There's a couple of kind of high level variables that I think are kind of the most notable in this kind of cooling period over the last 18 months. So, first of all, the rally was in part driven by the kind of shocks to global transportation and logistics patterns that the entire global economy saw. That made the cost of all internationally shipped goods spike in price, agricultural or otherwise. This dynamic is beginning to fade, and so too are prices of grains like corn and soy and wheat, like you noted. Now, for U.S. markets specifically, there's also been pressure on exports via geopolitical dynamics, the strength of the dollar, increasing pressure from Brazil, who is kind of rapidly become the low-cost global exporter of both corn and soy, and made U.S. exports less competitive. So all that said, prices have come down off of those peaks in 2022, like you noted, but I do think they're beginning to stabilize and at levels that remain quite profitable for farmers, given that they're still well in excess of where they were before the grain rally began. So, to the second part of your question, Robert, where do we think prices are going here over the midterm? I think driving prices over the midterm and sustaining them at higher levels than we saw before the grain rally is going to be a few things. So first of all, the era of volatility that we've seen over the last few years, that maybe started with the onset of the pandemic, but was accelerated with the Russian invasion of Ukraine. Sadly, it looks like maybe accelerating in the current environment in the Middle East. An era of volatility supports higher grain prices generally. Also other major macro factors that have not changed are finite supplies of arable land, general demand growth from a rising global population that just needs more calories. So all those dynamics really, I think, are going to continue to persist and lead to generally higher levels of grain prices than we saw a few years ago. Today, there's also, maybe some new drivers that weren't a major focus a few years ago, namely moving towards more sustainable production from an environmental perspective, and then also kind of new demand sources, most notably, I think, from the emergence of next generation biofuels like renewable diesel and sustainable aviation fuel. These are kind of under the radar demand drivers, but I think are increasingly needle moving sources of demand that I think are going to help sustain grain prices here into the mid to long term.
Fantastic, Ben. That was great. Thanks for that insight there. Mark, what do you see as maybe the correlation between crop prices and sort of the seed business, right? You're a seed company. Do you see pricing pressures on the seeds you sell, or is there sort of an inverse true that they are looking for ways to maximize profitability by deploying seeds that can maximize their potential there?
Yeah, and as Ben well pointed out, ag commodities, including grain prices, are definitely a function of supply and demand, right? So ag has never been a cost plus industry, and this reality has farmers always assessing the economic challenges of estimating production versus price per unit bushel. That would be variable throughout their production cycle, right? So this factor of the price variability impact on how farmers evaluate their variable costs is really nothing new to the farm community. And you really pointed it out. As farmers look at the environment going forward, they're going to definitely be looking at tools that can increase their productivity per expense unit. And the key fixed positions are the cost of land, the limitation of land. How do they make sure that they're driving for the most efficiency per unit produced with the resources that they have at hand, right? So I do think that it puts a focus on companies, and I'll talk specifically about seed companies. As we invest very aggressively in research, it's always focused on how do you increase productivity with less, right? How do you increase productivity within an acre that's going to be a fixed boundary? how do you reduce its overall cost impact as it moves forward? So farmers are incredibly smart business people as they look at the economics between investments made on variable costs against the fixed cost position they have per field, per acre. How do they optimize their return, right? So I do think it puts the pressure and focus on seed company investment. How do we make sure we either solve a production challenge, either controlling weeds, drought, being able to produce more with less water, productivity, plant health? How do we look at all those variables to ensure that the investment in research is returning a product that farmers can purchase and apply into their operation and increase their efficiencies and productivity to maintain profitability on farm, right? So as we look at this and work with farmers and making their production decisions, the whole focus is looking at how do we solve problems that increase efficiency, that increase security of production for farmer success.
Yeah, thank you very much, Mark, for that insight. Enrique, maybe sort of the same question to you. Maybe you could expand a little bit. How do you sort of see the macro factors roll down to the seed industry as well as maybe chemical and fertilizer markets here as well?
Yeah, sure. Look, I think that when we get into this type of discussion on commodity prices, we need to separate the noise of what is kind of like the short-term market from the longer-term sort of like trends of the market. And I think that out of what happened with Ukraine and Russia, there's something that probably in the last 5 or 7 years we thought that it was behind us, that is food security, that has all of a sudden been put on the table again. So it's not only about less stability from a geopolitics standpoint, but also something that is undeniable, that is climate change. So I think that these two variables are going to play a role in longer term commodity prices. And of course, that at the end of the day, commodity prices do play a role, like Mark was saying, in farmers' profitability. So we're not concerned at all about this volatility, because I think that farmers are very smart about dealing with that. Another trend that we are seeing out there in the market is that more and more there's a divergence between who owns the land and who operates the land. And at the end of the day, commodity prices also tend to adjust the cap rate on the land a little bit more than what they adjust farmers' profitability. And at the end of the day, for companies like ours, farmers' profitability is what matters. And most of that is variable in nature. So I agree with Mark that this is about how we can help farmers come up with more solutions that they can use in maximizing that variable profitability. So I think that at the end of the day, we're going to see a more technified agriculture going forward, not only on the productivity side, but also on the qualitative side. So in the seed industry, we might see some more technology coming up on traits that confer crops new quality attributes, and not so much productivity. So I think at the end of the day, what we are seeing is a more volatile industry, a more regionalized global market, so less globalization. And at the end of the day, we will see technology playing a role in how we can assist farmers manage that volatility. But again, not concerned on commodity prices going down and that affecting the inputs industry, as we see it as an opportunity.
Yeah. All right. Thank you, Enrique, for your insight there as well. And maybe Ben, building off that, those comments there, as an agriculture analyst focused primarily on companies that are developing sort of next generation traits and technologies, for those not familiar with the concept, help walk through sort of the history of seed trait development, and where are we in that cycle? Are there still new innovations to come, as sort of Enrique discussed here?
Yeah, so I could really geek out on you here about the Green Revolution in the 50s, but I think while that's awesome, I should probably limit the history here to recent history for fear of putting people to sleep. More recent history with the emergence of next generation traits really kind of began, I would say, in the 90s. Companies that have now been consolidated into Bayer, Corteva, Syngenta, BASF. developed traits within major crops like corn and soybean, basically allowed farmers to spray chemicals on a field that would kill the targeted weed or targeted pest without killing the cash crop. These have been remarkably effective, very important for farmers, and thus these traits are overwhelmingly dominant within the market today. The history of these is, and one of the big challenges in the market today is that this is a lengthy and very costly endeavor. To the tune of 15 years, and for the really intense biotech traits, several $100 million per trait of R&D expenses. Now, where are we in the cycle? Well, I think that there's still a very long way to go within the world of seed genetics for novel traits that can come to market in a much more capital efficient manner. Novel traits like in the case of Bioceres, or within historically overlooked crops, like in the case of S&W. This is possible today because these companies like Bioceres and S&W are more nimble than the major companies I just named, and because of advancements in breeding technologies, which are many, but most notably technology like CRISPR that a lot of folks understand from the pharmaceutical industry. These kind of technologies are enabling advancement of new trait development here, much like they are new drug development within pharma. So, are there more innovations to come? I think the answer to that is definitive yes. I think we're going to talk about that, on this, in this chat. But I increasingly see those coming from companies like S&W, like Bioceres, and less so from companies like Bayer, Corteva, Syngenta, and BASF.
Right. I think that's helpful. And, Mark, maybe again, sort of continuing to build off this topic here. Prior to joining S&W in July, as the CEO, you were with a variety of seed companies, as you mentioned, including Monsanto. When you sort of hear Ben talk about the history of trait development, walk through the challenges that farmers face in today's market. Water, weeds, insects. And how trait development can address these challenges.
Yeah, and that's to me a great conversation, Robert. I actually appreciated when Michelle Obama encouraged every household to have a garden, because in the reality, food production is difficult, right? Nature has numerous things trying to fight the finish of a crop. From the one that we hear about in the news every day are the two, temperature and water, right? So the increasing temperatures, decreasing availability of water, then you've got weeds, insects, you've got disease, but there's a whole host of things trying to attack a plant from finishing or optimizing whatever it's trying to produce, right? And I love the idea of trying to get the public to be more aware of just how difficult it is to produce food. But when you look at trait development, to Ben's point, the early years with biotechnology, was really heavily focused on the large acre crops, right? So corn, soybeans, cotton, the mega acre crops, and largely because of the cost of both the research and then the regulatory cost of working to bring those products to market, really limited that technology to be on very vast produced acre crops. So a lot of the smaller acre crops that could really contribute significantly to both society, farmer options for productivity, for some of the environmental benefits that we've all become very aware with cover crops and oil crops outside of just the large acre crops, were really left out of that scope because of their smaller size, right? From the advancement of new technologies that have come forward in the last 10 years and working to try to have a reasonable regulatory process on those that doesn't make the expense of advancing needs that we really need in society, really contribute to the opportunity as we go forward, seeing a lot of broader, smaller acre crops being able to benefit from some of the new technologies that are in place, right? So if you look at each trait, it's trying to solve a specific challenge the plant's trying to get through. And if you look at potentially controlling weeds and a trait that'll make the plant be able to be resistant to a herbicide that would otherwise potentially kill a targeted weed species to enable increased productivity of the acre and reduced risk, is an important contribution, right? But then if you look at the entire host challenges a crop goes through, it's difficult to just select into one, right? So as we look at technologies, each one is focused on solving something specific for optimizing a specific crop. And then if you look at the whole list of things that are challenging that specific crop, there's the opportunity to focus to address those more broadly as well, that we can talk about a little bit later in the session as well.
Perfect. Thank you for that, Mark. And sort of Enrique, I think we, at least in the U.S. markets here, tend to get U.S. centric, and I think your insights here would be useful in terms of being a global company with an extensive geographic footprint. Maybe talk about the differences you see in the agricultural markets you operate in. Do farmers act the same in each geographic area, or meaning do they always sort of look to maximize yield and profitability per acre, or you see other factors coming into play here?
No, that's a great question, and actually we do have the benefit of commercializing our technologies in more than 40 countries today, so we get to see that sort of heterogeneous profile of farmers. And I would say that the first kind of like differentiation that needs to be made is amongst row crops and cash crops. So in row crops, I think that profitability is king still. It has been, like Mark was describing at the beginning of the call, and I think that it will continue to do so. It's a highly technified activity. It's a very, very efficient market. So farmers need to keep the reflexes in terms of what technologies they use and in terms of keeping their margins. And I think that that's going to continue to be the case. In cash crops, in specialty crops, we are starting to see some other dynamics come to play. So, for example, it is important today what type of products you're using, and that explains why we've invested heavily in positioning ourselves in biologicals. We do see that there's an increasing demand from the end users, from the consumers of the food that is produced in cash crops, for not so much sustainability by itself, but also in terms of, I want to know what type of technologies and products are being used in my food. So there are some other dynamics that are coming in play there. But having said that, we broadly believe that more sustainable technologies need to compete with the incumbent technologies. So particularly in biologicals, we're betting on that technology being as efficacious as synthetically produced chemicals, so that farmers at the end of the day can choose more sustainable technologies without the trade-off that they would have in the past, for example, when biologicals were less efficient than chemicals. When you start putting these technologies at par, what we see is that there are other things that come to farmers' minds, and that's across the board in different markets. So, for example, if you today put a farmer in the US, in Brazil, in Argentina, that are probably the three largest ag markets in the world, in a position of deciding what to use, a biological or a chemical technology that are equally efficacious, they will all opt for the biological technology because there's more awareness on what chemicals might do to soil health and what that implies in terms of productivity and yield going forward. So again, it's still ROI, it's still profitability, but it's a different mindset in terms of measuring just this crop cycle or thinking about your field in a sort of like more of a midterm approach. And we see that across the board, again, in the most developed countries or markets, I should say, Latin America, the Americas as a whole, I would say, Latin America and the US and Canada. Probably different dynamics in Europe, where there's still a big gap between technologies that are being banned, particularly in crop protection, without a clear replacement for those products. So there's more of a complex situation for the farmer, and there's still less of productivity focus or profitability focus, but because of regulations. So I'd say that in row crops across the board, and globally speaking, with the exception of Europe and these restrictions, there's sort of like a leaning towards productivity and profitability. And in cash crops, we are seeing other dynamics come at play. In markets like Mexico, Central America, where you have other crops than the typical soybean, corn, and wheat that you can find in row crops.
All right, that was great, Enrique. Thank you for that insight there. And Ben, coming back to you here, and I don't want you to sort of provide your opinion on specific companies here or traits that our co-panelists at least have developed, but in your opinion, what are the biggest developments that you see on the horizon to address sort of the everyday challenges that farmers are facing?
Yeah, so I think both Enrique and Mark's comments throughout this call so far have really highlighted the challenges. I mean, Mark talked about kind of maximizing the profit per acre on the farm level, and as did Enrique, who also talked about the kind of pivot from synthetic inputs to biological inputs. And to be clear, though, that pivot to more sustainable inputs that we see throughout the ag input sector, be it fertilizers or chemicals, is driven not because of kind of a flowery ESG push, but as Enrique highlighted, that a legacy synthetic product may have very direct harm on farmers' soil, and if you harm the soil, you harm your yield. If you harm your yield, you harm your economics. And so we see advancement throughout the ag input space, be it seeds, fertilizers, and chemicals that are bio-based and more equally or more effective than synthetic alternatives. You see that in the chemical side that Enrique talked about, and I'm kind of keenly interested also in the bio-based applications of fertilizer within the end market. Excuse me, the kind of sub markets within agriculture. I think fertilizer is one of the most kind of problematic segments, and one that's most poised for disruption. And I see a lot of emerging kind of bio-based solutions that I think are very scalable and disruptive on that level. Within the world of seed, you see companies like Bioceres and S&W that have two of the very real solutions for farmers to be able to do just this in the seed sector. So again, where novel traits improve yield in the face of drought or pressure from weeds. These are persistent challenges for farmers, and technologies like what Bioceres and S&W have developed are very, very appropriately focused on these challenges. Another one that I'm kind of keenly interested in that Mark touched on is the advancement of new crops that a lot of people have never heard of that are grown over the winter, harvested in the spring. These are called cover crops. These have historically had environmental benefits, but a little economic value. And so really there hasn't been a focus on developing these or commercializing them because of that. But today that is shifting because much like corn is a feedstock for ethanol, and effectively represents a third of the entire 90 million acre US crop. These cover crops can serve as a feedstock for renewable diesel. This is a major emerging source of demand in the US that not a lot of people know about yet. Companies that have developed technologies to serve this market, I think, are really interestingly positioned for kind of the next phase of agriculture.
That's great. Thank you for that, Ben. Mark, let's sort of use this as a segue to sort of our, sort of wrapping things up here. Let's talk a little bit more specifically about S&W. You've talked a little bit more. Your primary crop focus on the trade side is sorghum. Talk a little bit about the crop at a high level for those that may not be familiar, and then sort of the technologies that you have developed here.
Yeah, and at S&W we're passionate about sorghum, Robert. To your point, sorghum is also referred to as milo, but it's the 5th largest global cereal crop. And one of the unique things about it, it's very well equipped to handle higher heat, lower water availability to produce a crop. It's a nutrient-packed crop. In some parts of the globe, it's used primarily as a foodstuff. I know, as Enrique talked about, across Brazil, Argentina, Mexico, and US, it's primarily a feedstuff for either livestock or ethanol or other purposes similar to corn. But being uniquely equipped for higher heat and lower water availability is extremely important, right? The challenge with sorghum in the past, being a smaller acre crop, is it hasn't had the investments to support productivity, particularly with weed control through its primary markets. So We've seen acres in the U.S. move from 10 million over the last decade to about 6.5 million this last year, because farmers seek out those tools to be able to raise a crop. But as we see the continuing increase in temperatures, the reduction in water availability, sorghum can actually finish a crop with about 25% less water. So if you look at the central west part of the U.S. where most of these acres exist, there's a lot of dryland corn or corn on irrigated acres that would be much better served moving to grain sorghum. So we launched a trait that enables you to be able to control grasses, and sorghum and corn are primarily a grass. So any herbicide trying to do weed control to control grass is also trying to damage the crop, right? So through unique research, which is not a biotech event, we've been able to breed in resistance to a grass herbicide that's very effective for controlling Johnson grass, shaddercane, and other grasses that really rob yield and rob moisture in the crop. So by providing a tool and providing more stable productivity to farmers, we definitely look to continue to grow that position within the sorghum market, as well as hopefully contribute to increasing sorghum acres, returning on acres, which the crop would be much better suited for than what it's potentially moved to. And as we look at the DT event that we just launched, it's really just the first event of many in the portfolio to really look at making contributions to grain sorghum, really across the target U.S. market, but as well working very well across Mexico, Brazil, Argentina, and Australia for other non-U.S. key markets for grain sorghum, which also make up about 8.7 million acres of additional grain sorghum market we can reach. We're also looking at taking this product to the market. In the U.S., we have strong brands as well as partnerships with key seed companies that can deliver, already have relationships with farmers that can deliver the technology through their brands, through licensing, as well as looking at as we move into the Mexico, Brazil, Argentina, and Australia markets, working with seed companies that are already established, already have strong sorghum germplasm in those markets, working with farmers and working through a licensing arrangement for the trait, for them to be able to integrate that trait into their hybrids and be able to represent to the farmers they currently work with in those markets. So we're excited about the entire sorghum portfolio, but we also believe sorghum itself is an important crop societally, and to try to help break up rotations and offer other options to growers. So we believe it's an important crop as we move forward.
Fantastic, Mark. Thank you for that overview. You know, Enrique, I want to do the same here with Bioceres. You know, you're a fully integrated provider of sort of crop productivity solutions, again, anchored by your HB4 technology. You know, talk about the crops you're addressing and your technology as a whole here.
Yeah, sure. So yeah, like you were saying, Robert, I mean, we're a fully integrated platform. So today I'd say that we are addressing a multitude of crops with our biologicals portfolio that span all the way from cash crops into row crops. Particularly in the seed space, we focused mainly on soybeans and wheat that have two very different realities. Soybeans is probably the most developed crop from a technology perspective, where you have a multitude of technologies already in the market. It's probably the star if you take a look at the last 20 years of the agricultural markets in terms of tech development, head to head with corn probably. And all the way on the other side of the range, you've got wheat that from a technology perspective, or from a biotechnology perspective at least, was kind of left orphan for many reasons that probably are too long to discuss in today's call. But we took that as an opportunity. So we are today the only company that has an available technology that is commercially available to farmers in wheat that confers drought tolerance, this technology that you called recently named called HB4. That is the same technology that we have in soybeans. So in those two crops, we see a big opportunity. These are major crops. Wheat is the biggest staple crop globally speaking. Now, having said that, we don't think so much in terms of crops as we think in terms of where the opportunities lay in our culture. So our culture is an industry that grows at whatever, probably Ben is much more suited to say that, but 3-4% sometimes above global inflation, sometimes below global inflation. But there are still pockets where technology has a big role to play. And we see that particularly happening with biologicals to replace chemically synthesized products. And then in every type of technology that has to do with drought or temperature stress, like Mark was referring to. So in those two things, we see that there are secular growth trends. And in summary, that is what has allowed us to grow at probably 4 to 5 times the industry rate in the last 6 years almost. So that's what we're looking for. We're looking for pockets of potential innovation that can address secular growth trends in the industry and not so much thinking about it in terms of crops. Having said that, wheat is kind of like what we want to be able to bring to market, because there's, other than the economic opportunity and sort of like the return on investment for our shareholders, there's also a reputation, sort of like a challenge there to make this crop become a little bit closer to what corn or soybeans are in terms of technology development. And we're making headways in that. Actually, we do have business together with Mark down in Australia, where we are deploying our HB4 technology in the seed assets in the germplasm that S&W used to own sort of like themselves, and now we are sharing that business. So exciting opportunities, but I do think that our culture, like Ben described, is open for business, and there's going to be very good returns, but you need to find those pockets of innovation. And we are seeing more and more a trend where the big companies, the big incumbent companies, need partnerships. And like Mark was just mentioning, they need smaller companies that are leaner in producing innovation to sort of like make headways with that, and then partner with them. We have very good relationships with some of the industry leaders. In some markets, we go to market ourselves. In some markets, we partner with them. But there needs to be this co-development of technologies and in the go-to-market so that this is successful. I don't think that agriculture is a market where you can just produce technology and collect a royalty. You need to show that you can take things to market. In the same way that I can tell you that, at least I personally think that none of the technology companies that you will see in the agricultural market are able to capture the full market opportunity without the help of the incumbents and the big companies. So that's also an interesting sort of like dynamic to watch.
Thank you for that, Enrique. And I think, Ben, sort of maybe in wrapping up this discussion, I think what you sort of touched on there is sort of the genesis of this whole panel here. And again, I won't ask you to speak specifically to our other panelists, but help the listeners understand the role that smaller seed companies play in sort of this agricultural ecosystem. An ecosystem that's, as was mentioned at the beginning, dominated by the large players, the Cortevas, the Bayers, the Syngentas, et cetera. Talk about that role that the smaller seed companies play in agriculture here.
Yeah, so I mean, on the one hand, while those major players dominate the market, I couldn't agree with Enrique more on smaller companies like this are more nimble, have a more successful kind of rifle shot approach to R&D for all of these next generation products. And I think that as these products evolve from the R&D stage to commercialization and prove both economically and technically in the field, I think that they are increasingly sought after as partners or targets by these major players. For investors on the call today, small cap investors, I know have a hard time grasping the world of agriculture because it's a bizarre one. But I think it's really helpful to understand this dynamic of where these small companies can be differentiated, and also the similarities between agriculture and the pharma sector from this perspective as well. So it's these small companies like S&W, like Bioceres, I think really are increasingly well positioned for the future of agriculture, and I think there's a lot of alpha that can be generated accordingly. I mean, the small cap market is not for the faint of heart. We all know that. Agriculture is as well. But for long-term investors and stock pickers, picking stocks like like we've been talking about today, that are really well positioned for this future is something that I think is a real long-term alpha generator.
Fantastic. Well, I think we're sort of closing in at the end of the time here. Maybe just Mark and Enrique, sort of your closing thoughts, and Mark, I'll let you begin.
Yeah, so Robert, you and I've talked about, but I entered S&W at a very fortunate time, right? So we launched the first DT trade in 2021. This last year, it was on 6% of the U.S. sorghum acres. We're looking at being on over 10% of the U.S. sorghum acres as we finish the year. We're moving forward with the licensing approach globally. We also launched the DT forage sorghum product this year in a successful launch. And then we've got a large pilot of prussic acid free, which is a crop safety for sorghum grazing, which will increase the value of both grain and forage sorghum for being able to safely put livestock out earlier in the year to be able to graze on crops, right? So I'm fortunate to have come when I have. The opportunity as far as S&W launching traits into the market is no longer a question. Now, as we move forward into really reaching the entire global market, is a great opportunity. And then as we look forward, each of these individual traits being stacked to add value on top of themselves as we move forward with farmers. And then we've also got in discovery insect trait platforms, as well as broad herbicide traits as we look at our full pipeline. It's just an exciting time to have joined the company. And I didn't talk a lot about it, but S&W also has a 35% interest in VBO, which is a joint venture between S&W and Shell, focused on what Ben talked about with the renewable biofuels with a short season crop that can enable farmers to have a couple crop with a 3-crop cycle as opposed to a 2-crop cycle in a 2-year period. So not displacing any acres of a food crop or others. It's just an exciting time to have joined the organization, and feel very good about how we move forward. And I do think overall with agriculture, I do think we're at a time period where looking at how do we create more with less, be more efficient, focus on the issues around climate as well as water utilization. I think for farmers, there'll be a lot of opportunity. It'll keep challenging them to be on top of every development in the market. But I think there's a lot of opportunity for agriculture to keep advancing as we go under the effort of feeding 9+ billion people globally.
Perfect. Thank you very much for that, Mark. And sort of Enrique, sort of your closing comments here.
Absolutely, I couldn't agree more with Mark. I think that agriculture is uniquely positioned today. If you look at what are the global discussions that we are having as humanity, I mean, sustainability is no question a big theme today for us. And agriculture is probably from the major human activities, the one activity that is dealing with CO2 consumption. Naturally, we deal with plants that at the end of the day to deliver yield and need to transform CO2 into oxygen. So that is exciting, being able to work on an industry that can be a huge contributor into minimizing the human impact on global climate change by introducing technology to market. That's exciting. And the good thing is, and I'm going to Ben's comment about pharma, is that agriculture provides that scale of the opportunity. The market is already there. So this is about how much share of that already existing market these new technologies can take. And there's a huge runway. I mean, look, when we, Robert, got the company publicly traded in 2019, we were a bit north of $100 million in revenues and $15 million in EBITDA roughly. We just reported $420 million in revenues and $81 million in EBITDA. And the good thing is that when we look forward, we still have a multitude of levers to pull and a multitude of technologies to bring to market to keep delivering that type of growth. Obviously, this is not digital. This is not something where you will see 10x growth year over year. But if you use science correctly, there's a big market to be addressed. And there are sort of like long-term returns to be obtained by patiently bringing technology to market and taking market share away from existing technologies that have nowhere to go. So there's a unique combination there. And I think that out of the consolidation process that we've seen in the agricultural market in the last decade, there's been kind of like a little product left for investors to think of in terms of being exposed to agriculture. So you're either part of one of the big companies, or there's kind of like not much in the middle. So companies like S&W, like Bioceres, might sort of like offer a possibility for investors that want to be exposed to agriculture, and also have that additional kicker of technology. That is what at the end of the day delivers growth and value out of this industry.
Fantastic. Ben, Enrique, Mark, I found this incredibly insightful. I hope that all of our listeners have as well. Again, thank you very much for your participation today. Greatly appreciated. I'll just, remind everyone in the audience that if you'd like to get in touch with any of the panelists, shoot me an email, bloom@lythampartners.com. Happy to coordinate any introductions there. Again, thank you all for joining us today. We hope you enjoy the remainder of the conference here.
Thank you, Robert.
Thank you, Robert.
Thank you.
Thanks, guys.